Welcome to last video of the year. New Year's Eve today, and Merry Christmas. A little bit late, but to everybody, happy holidays and with families and friends. So, decided to do this one last video today, and hopefully make more next year. Short and sweet, good content videos and effective. Basically, what I normally do on a day-to-day basis: research practical ways of using Bitcoin. This one is going to be interesting, so let's get started real quick. Basically, what we would like to present today is the benefits of accepting Bitcoin and storing Bitcoin. Just as context, as we see on that slide, is the perception versus reality, as we see there. Crypto is not Bitcoin. Bitcoin is store of value, potential energy, energy at rest. That basically means it's a store of value over time. It's also a medium of exchange, which means it's kinetic energy or energy in movement, or value transfer in movement, in motion. And that's basically that Bitcoin is saleable over space. So having said that, let's get into it. Basically, we'll talk a brief overview of what Bitcoin is. I always like to introduce this just to get everybody on the same page. It's basically short history. 2009, white paper came out. It's a proof of concept, but the idea is that it operates on a decentralized peer-to-peer network that is not controlled by central government or financial institution. Bitcoin transactions are all verified by network nodes through cryptography, and it's recorded in a public distributed ledger called the blockchain. And it's basically the intro of where the term blockchain comes along. Blockchain is maintained by a network of computer nodes running specialized software that's validate transactions to prevent double spend. I'll have a different video next year depicting this specific scenario. I have a very good slide explaining how that works, and explains exactly what's proof of work and how does it work and how the blockchain actually works in a very descriptive way, very simple. But basically, Bitcoin also has a limited supply, so it introduces scarcity into the digital world, which was never there. And today it's being used to purchase goods, services, merchants, who accept it as a Bitcoin payment. I personally use it whenever I travel, and it's not a niche market. It's not a niche thing that's happening. It's actually being used right now. There's the use of what they call merchant payment processors that allow the merchants to receive Bitcoin and then be able to jump over into the fiat world. So that's another aspect of this. To continue this introduction is basically the importance of accepting Bitcoin Lightning for business. That's the main purpose in the guide. And what are the benefits of doing this when you accept Bitcoin and Lightning? You first attract a new customer base. That's the first thing. Why? Because especially if you live in a tourist area that outsiders come into your market, you want to be able to say, okay, well, whatever payment you're using, I'll be able to use it as well. So this includes, whether those customers will use Visa, MasterCard, they will now be able to pay in this new currency that they're used to using wherever they come from. It also, another benefit is the low transaction fees, and everybody talks about the transaction fees that are happening right now. There's ways in which you can lower these transaction fees. At the moment, it's difficult. So you have the liquidity service providers out there that will be able to help with this transition. When the fees become normalized, then you can entry into Bitcoin a lot easier, uh, basically establishing these balances that you can use when the fees go up, basically. So, but we'll go into those a little bit later. You also have a faster payment processing that's happening. Everybody says, well, it's still too slow because it's every 10 minutes, but compared to the traditional fiat world, it's super fast. But indeed, 10 minutes is a little bit slow. So we move into Lightning, where you have a much faster settlement. It's actually the transaction is the settlement, versus in the very fast traditional fiat world like PayPal and Venmo, where the transaction happens first and the settlement happens later, and sometimes days later. There's also a degree of security that gets added when you start using Bitcoin and Lightning, and there comes responsibility with that. So you could end up locking yourself from your Bitcoin. So there's got to be able to be good education, good due diligence, good auditing, security, etc., to be able to make sure that the procedures are in place that you do not do such a thing, right? And you establish security at a level that allows you to perform your business according to standards, basically. You will reach, just like we said, a new customer base. We're going to have a global reach as well. So there's going to be your product will be able to be sold. So it's just a matter of delivering. If it's a physical device, a physical product or service, then or a physical service, then or physical product, then that has to be delivered. And but the transaction and the settlement will probably be instantaneous. There's also simplified record keeping. So because there's a recording on a blockchain, whether it's encrypted, private, public, doesn't matter. It's just about simplifying record keeping. You also have reduced reliance on intermediaries. So now you don't depend on a third party. You don't depend on a bank. You don't depend on a financial institution. Then moving into challenges, there's a couple. One of them being price volatility. That's important because merchants want to have as close to a stable currency as possible, so that they can maintain their goals and their objectives for the business by having predictable value, store of value, or with their transactions. So the whatever medium of exchange they want to have a store of value that keeps that value long term and that is predictable, not volatile. So that's important for a business. So that's a challenge, and we'll talk about some solutions that we have that Bitcoin provides, and there's also challenge of initial limited adoption. Again, that's why we're here. We're trying to educate both government and private entities in the region, wherever we go to give education, to provide this type of understanding, so that adoption becomes a lot easier. But businesses should carefully consider these factors before deciding to accept Bitcoin as a form of payment. Something to enlighten ourselves with is this graphic that I have here. As you can see on the screen, you have a point of sale, basically, that could potentially provide multiple features, have multiple services within that one device. But the idea here is that this is open source hardware. It's the first thing, and it's open source software inside. So there's no well, I have to go to a manufacturer and get all their services like we normally do now. So you go to a retail store and you will see either a bank provided point of sale that's purchased by the merchant, comes with the service that they get, and you get these devices, which in turn have a third party, basically, or the third party would be the bank, but then the bank has a contract with another party that provides these devices. In this case, the merchant can go directly and acquire these devices and incorporate the software in them. So there's the cost is less for entry. Let's put it that way. But what can you do with these devices? You can have direct tax collection, direct reporting to the central bank if you are reporting to the central bank, or if there is a central bank. And we all know what's happening in Argentina, but the point is that you can have direct reporting to the central bank, direct reporting to your government itself. If the central bank is separated from the government, you'll have let's say two departments within the government. You can also have multiple transactions per settlement. So what this means is that your device can acquire a Bitcoin transaction and a Visa transaction and a MasterCard transaction and some other means of transaction. You know, maybe a fund miles or some kind of token from a manufacturer or a service that could be incorporated. So you could settle these transactions basically on this device. The device comes with debit, credit card type of standard, IC readers that are common these days. The device can also provide real-time sales and monitor data that is centralized. Basically, that data is captured, whether it's metadata or just the actual data that gets captured, gets sent to a centralized location where more information can be produced out of that data. It's an all-in-one point of sale, terminal, QR code, scanner, NFC. It's also customizable, so you can customize it how you want it. It's portable, as we can see. You can give one of these to every waiter in a restaurant, for example. It comes with camera, scanner, fingerprint built in, whether it's on the screen or it's on the side or it's a camera that can scan. There's multiple possibilities if the region, the jurisdiction requires KYC or for AML standards or ML requirements, then that is there. That device can provide that. So the first step is to have what we call some kind of merchant wallet. In this case, Wallet of Satoshi is one of the examples that I always give to do this. We'll play a small video of how that works, and as we play the video, you'll see no sound in the video. It's just explaining. But you have on the left side the staff POS, and the right side is the owner's POS, and this is what's happening. They enter the charge amount. The customer then scans that QR code, and the balance goes there. It pays, and then the owner, basically, you see in the green on the right side, gets paid first, and then the waiter gets, acknowledgement that happened. In the standard device, here you have a device that has the same software in it, and you can do it without having a smartphone. The customer in this case has a NFC card that you can charge and perform this sale as well. So it works the same exact way. It's a very short video explaining how this works. So enjoy your coffee. So why do we have separate apps? You might ask, is there's no login requirement, receive only. Staff can use this, but sats go to merchant wallet. So the recipient, the waiter has an app. They don't need to log in. They just need to download the software. They link it to the wallet of the owner, and that's it. So the idea here is that they can perform point of sale transactions without manipulating any transactions coming out of the wallet. Basically, in other words, the cash register keeps the value trapped in the cash register. That's basically what the traditional cash registers are all about. Using QR code, work with other point of sale solutions. Now, in terms of volatility, which is another challenge that we have here the Blink wallet that provides protection against volatility using what we call stable sats, and we'll talk a little bit about what stable sats is all about. But the idea here is that you can now have a USD account added to your wallet. So as you can see in the screen, you'll have here two balances. Basically, you have a Bitcoin balance, which is a traditional sat. In this case, it's $5.86. And then this user in the wallet itself has stable sats, but $21. So you have dollars and Bitcoins denominations, right? Obviously, this is 21 plus 5.86 equivalent, which is your main balance in dollars. And the user, how they want to display that currency, it's up to them. But the idea here is that this stable sats, if Bitcoin goes up or down, so if that, tomorrow Bitcoin goes down and this 586 drops to $2 or $3, your $21 stays the same. So basically what it means is that Bitcoin, without worrying about short-term volatility, when you hold money in the StableSat account, the value of that account will always stay the same in US terms, in USD terms. So it's fully interoperable with Lightning invoices, so you can send back and forth Lightning payments. It goes the same thing with the other Blink wallet that we talked about. And wallet of Satoshi has the same idea. This is all about Lightning payments. And you set this StableSats or you BTC as your default. So you pick which default account you will be using. But the idea here is that you can decide as a merchant or as an individual, says, you know, I just want to receive Bitcoins and immediately transfer them to my non-volatile account, which in this case is the US dollar, and it keeps those dollars there. So you could have the 26, in this case, this scenario, you can have the 2686 all be in StableSats, and if the price of Bitcoin goes up and down, it's always going to be $2686. So what are StableSats? These are derivatives. If you know a little bit about financial markets and financial products and services, derivatives is just another product that was invented by Wall Street and the financial brains out in New York and Wall Street and London and all these other places came up with derivatives. So that concept has ported over into Bitcoin basically. So StableSats offers a third option, for BTC banks. Instead of having this integration of derivatives derived from a banking institution, you can now have it in Bitcoin. We're going to have a chart below that compares the trade-off between the two typical options, stable coins and fiat banking integrations. We'll point to a fourth one, which is what we call discrete log contracts. But as you can see on this table, you'll have the dollars. You could have dollars in a bank, and basically you trust the bank, right? And bank access required, of course. There's what KYC, AML happens, and there's relatively high fees when you store dollars in your bank, and that's how you keep the volatility low, because you keep dollars, keep your incoming money in the bank as dollars. When you have stable coins, these are the USDC from Coinbase. They're usually by issuer. In other words, they're being regulated, so they're backed up by banks or by institutions that have backing one-to-one to these stable coins. So there is, again, banking is required. There's KYC. The fees are lower in that level, so that's why this is becoming very attractive, because it's regulated, it's by jurisdiction, etc. But then you come this third option, which is derivatives, StableSat, which is what I would just depicted, which is what we call there's a digital exchange behind. In this case, this is going to be Blink. Blink, the company behind it, has some kind of exchange that maintains derivatives to keep that volatility. In other words, to maintain that peg to the US dollar. Banking access is not required. It has the lowest fees. Now there is KYC in derivatives, or at least the filtering of US citizens that are not allowed to be using this, so certain people cannot use these products. But then that barrier will go down, because you'll have in the future discrete log contracts, which I'll have a different video that explains another product that has this feature in it. But it uses type of oracle or federation or some kind of group of validators. Again, no banking access required, and the fees are to be determined. We don't know yet, but they're probably going to be in the areas of lowest, or within this realm of fees. So that's basically the idea behind StableSats. In terms of how Curacao in the Caribbean is moving along, we have BTC Curacao. It's a website that we can go to. Anybody can go to and take a look at what's happening. There's news articles and blogs. But one of the things you have there is also a list of merchants that accept Bitcoin. At the moment, from the last time I went to btccuracao.com, you have 90 merchants that accept a Bitcoin. And then there's also this BTC Map app. Anybody can go there and take a look, and you will see within a geographical area, you can see which merchants accept Bitcoins. So this is a very good tool to go and have in your phone, for example. Now, if you're a merchant and you're accepting Bitcoins abroad, or you have some kind of website that you want to provide services to accept, because this is another solution, it's OpenNode. You set up a digital wallet as a business to receive payments. You integrate a payment processor, so you have something like OpenNode being a payment processor that will be able to interchange between your local account and Bitcoin. So the OpenNode in this case will be able to transfer or sell Bitcoins on the open market and then deliver a fiat currency to your bank account. But then again, because it's a payment processor, you'll have to have a jurisdiction that provides this ability, and it depends where OpenNode will operate, yes or no. This ensures a seamless, secure payment processing for the customer, because the customer can then purchase using Bitcoin. You'll get a QR code and all that stuff on the website to provide for the customer. Keeping track of the value of Bitcoin, businesses have to keep track of the value of Bitcoin, adjusting their prices accordingly. So this is important for merchants to make sure that they have correct adjusted prices for the selling of their products in Bitcoins. And that's where these tools come into play, because they will be able to show a dollar denominated and provide an immediate Bitcoin balance or sats that need to be sent to be equivalent to the current price of the exchange of the current price of Bitcoin. I just placed this one website here because you can then pick, depending on if you use WordPress, for example, you could have all these plugins that you can use, and you can go to OpenNode and get more information on how they actually do that. So for now, there's no Q&A. This is just a video, but this is typical presentation that I give. So I'm hoping that you enjoy this presentation, share it with everybody, and subscribe to this channel, as I will be deploying more videos in the future. Thank you.